And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Katie Greifeld taking you through to that closing bell. It's a global simulcast. It started. There's Carol Massar. There's Tim Stenovec. Welcome to our audiences across all of our Bloomberg platforms, television, radio, our partnership with YouTube. A bifurcated day, Carol Massar, in the market. The S&P flat on the day. The Nasdaq in the red, yet still seeing some meaningful outperformance from the small and mid-cap stocks.
Yeah, I love that you went there, and we keep talking about, the S&P 500 overall, little changed here, barely on a percentage basis, but yet you dig inside the index, and you've got most of the names there, more than 350, that are actually gaining ground. So you've got to kind of dig deeper to kind of get to the individual stories and stock trends in today's trade.
I spotted a nice little technical that kind of speaks to the outperformance of the Russell 2000. It's beaten the Nasdaq 100 by about 4 percentage points in the first 5 sessions of this year. It's the second best outperformance to start a year on record.
Wow. Yeah, it's pretty staggering. I will say we were having a really interesting conversation with Jill Carey Hall over at Bank of America, who covers small caps specifically. Obviously, she is psyched right now. She likes the little guys, but not the micro caps, not the ultimate small companies out there. So you still have to be careful.
And we should point out, we talk about this setup that we had to start the year. It's still a pretty decent setup, and that Russell stat that you cited, Tim, is really important. But let's not forget, we get a big economic data point tomorrow with that jobs report. We're going to finally get back on the track with that CPI reports. And we have earnings season kicking off, at least for the big banks and some of the bigger companies next week as well. All right, as for today here, you see the numbers on your screen with the Dow Jones Industrial Average adding about 280 points here on the day. That's going to be good enough, up for about 0.5% on the day. The S&P, we'll just call it unchanged, still holding right around that 69.21 level, while the Nasdaq Composite and the Nasdaq 100 dipping by about 4 to 0.5%. And your outperformance, Dow Transports and both the Russell 2000, each up 1.1%.
All right, folks, and back to the S&P 500 I go. As I mentioned earlier, 356 names actually gaining ground in the S&P 500 today, 147, Katie, to the downside.
I am so excited to talk about the circle today because it is absolutely fascinating. You see technology there down by 1.5%. And you take a look at what actually is doing well today. What is lighting up the screen? Energy, higher by more than 3% today. Consumer staples also higher by more than 2%. Consumer discretionary higher by 1.7% as well. So there is a lot of movement to the upside, a lot of big gainers today, Carol, but certainly tech taking a bite out of the index.
All right, guys, so let's go to some of the individual gainers, if I may, in today's session. I'm going to look, first of all, at an index, and that is the home building index. That group up more than 4% in today's session. Keep in mind, soaring today after selling off yesterday afternoon when President Trump talked about banning institutional investors from buying single-family homes. So we saw, I think, almost all names. Let me just check on my Bloomberg. All names in this index. Yep, there are 18 of them. All of them are higher in today's session. So it's kind of, we try to make sense out of what the president says, and sometimes we got to see if there's any kind of real policy changes or something that ultimately comes out of it. So housing roaring back today. Defense names also coming back. Take a look at Lockheed Martin, up more than 4% in today's session. General Dynamics, a gain of 1.7%. Northrop Grumman, a gain of about 2.4%. Names again in that group sold off yesterday when the president targeted the group by warning contractors that none of them should pay dividends, none of them should buy back their own shares, or pay executives in excess of $5 million until they speed up production and maintenance of their products. And then shortly after regular trading closed yesterday, we had major defense stocks coming back after we saw the president talking about the military budget should be now $1.5 trillion, a 50% surge for fiscal year 2027. That is a big bump to the upside. And I just want to mention Alphabet, because it did take over, or overtook, I should say, Apple intraday to become the second most valuable company by market cap. So we've just seen Google on a tear. I mean, this is the first time Alphabet has been larger than Apple since 2019. And keep in mind that I think Alphabet was the best performer among the Mag 7 in 2025. And I'm just going to take a look. Alphabet's market cap finishing the day at where?
$3.93 billion, Carol Massar.
Okay. How do you do that, Romaine?
You're just checking, right?
3.93 trillion.
You want to make sure I got this right.
Yeah, and Apple's like 3.8 now.
Thank you for doing that.
Sure thing. Tim,
I appreciate
pick up
it.
here because you had to help Carol here.
Okay, well, let's start with Nvidia because
a tough crowd.
It was kind of a Alphabet was kind of a standout when it came to in the Mag 7. We're seeing this rotation out of big tech. Nvidia down 2.2% today. Broadcom, Microsoft, Apple, Micron, Meta Platforms all dragging the market lower. Nvidia's down about 11% from those October highs. There was that Bloomberg exclusive this morning that China does plan to approve some imports of Nvidia's H200 chips as soon as this quarter for select commercial use. Also watching in the S&P 500, memory chip makers took a bit of a dive today. SanDisk, Western Digital, Seagate all falling today. SanDisk down more than 5%, Western Digital down 6%, Seagate down more than 7%. These were some of the best performing stocks in the S&P 500 last year. SanDisk was up 560% from its February debut last year. Western Digital up last year, 284%. Seagate up 225%.
What's driving this, Tim?
Because
I kept looking around between that, all the software companies, the cybersecurity companies, they're all down today, but there's no news.
I know. I was trying to figure it out too. I got in touch with Bill Maloney, who's our
I like that guy.
We love Bill.
Yeah, the
he said
macro squad.
After the performance last year, they're just taking a little bit of a breather.
Okay,
that's the technical analysis, and I'm sticking to it.
A breather.
Yeah. Finally, let's look at ADRs of Rio Tinto today, taking a bit of a hit. Glencore ADRs rose as much as 7.4%. Rio Tinto closed down 0.8% before they fell as much as 3.9%. This after the FT reported that the miners have restarted talks over a potential merger, citing unidentified people familiar with the matter.
And we should point out that as we're speaking right now, Rio Tinto now out with the statement confirming that they have been engaging in talks with Glencore. I just real quickly want to bring your attention to General Motors. You have a redhead crossing the Bloomberg terminal right now. Those plans to scale back their EV strategy, they're expecting to book a charge of about $6 billion for the fourth quarter related to that. And also, I think this is on top of that, there'll be a $1.1 billion charge related to non-EV related business. So in total, the company says expect about $7.6 billion in charges for the fourth quarter period here. That does seem pretty significant. We have to go back and check to see what they said when they first sort of unveiled this new strategy. I feel like we were in the $4 billion range here, but they report in about 3 weeks' time here.
So the total write-down from GM's huge bet on battery electric cars to $7.6 billion following smaller charges revealed back in October. GM will recognize the latest EV charge in a separate $1.1 billion write-down of largely related to the restructuring of its China business. Just reading from David Welch's reporting, this just crossing the Bloomberg terminal.
Which kind of makes, sense that, some of this has been already fed to investors. I'm looking at the stock just down about 0.4%, down 0.2% here in the aftermarket. So we know the EV story certainly for the American automobile companies. And so this kind of is just a continuation of the drawback, certainly here in the U.S. market.
Well, you think about Ford back in December saying that it would take a $19.5 billion charge when it comes to scaling back their own EV business. Maybe that sort of softens the blow of what you're seeing when it comes to GM's own plans. But this seems to be a theme with our big automakers here, just scaling back when it comes to EVs.
Well, and it's interesting, too. There were a bunch of stories, including from Bloomberg, Financial Times, New York Times, just a few days ago, kind of talking about how bad, or I should say how much of a slowdown that we saw in the growth in EV sales. You mentioned that $19 billion. We had Jim Farley on around the time that they were talking about that. Now you have GM, and it really is raising a lot of questions for whether all these automakers and that big push that they had made into pure play EVs might have been a misstep.
Well, so I think it's fair to say, as of now, it was a misstep. The goal that Mary Barra had was selling 1 million plug-in cars by the year 2025. It sold about 170,000 EVs last year. It's cutting production and workers. It's already placed 5,500 workers on at least temporary furlough. I think that, as we heard from Ford, EREVs seem to be at least the future, or maybe the bridge to full EVs.
Right.
But and hybrids, but Americans don't seem ready to fully embrace EVs. No question.
That's the thing. When we spoke to Jim Farley, he was pretty frank that they're listening to the market. They're listening to consumers. And exactly to your point, Tim, it seems like the consumer just isn't ready to go all electric. I will point to some comments from GM CEO Mary Barra. You think about the goal that they set for the company to go all electric by 2035. It's hard to say where this nation and where the driver will be in 9 years' time.
I think it's also interesting. It comes on a day when Piper was out with an upgrade on Ford, GM, and Stellantis, specifically saying they upgraded GM shares to overweight from neutral, and says the company has too much earnings power and buyback capacity to ignore, and also cited minimal China risk and a less punitive EPA. Consensus looks beatable. So it's interesting.
Yeah.
I don't know. We'll see.
And I just want to point out the reporting by David Welch. I mean, he does point out this idea that the company hasn't abandoned the EV strategy. It's more of a little bit of a pause or a slight pullback here. And he does say in his reporting that the company is working to actually lower the cost of production on those models and is looking into new, quote, battery chemistry and designs that will help reduce those costs that it pays. And then, of course, in theory, would reduce the cost to the consumer to bring those cars more in line with the cost of a gas-powered vehicle.
And let's not forget, it's a global auto market, right? And so we certainly see what's happening in China and in India and other places around the world.